China's third largest bank has debuted on the stock exchange halfway through a share issue that's expected to be the largest in the world. But trading in the new stock was muted as Shanghai's share market continued to fall amid concerns about the future of the Chinese economy. China correspondent Tom Eagleton reports from Shanghai.
Agbank's chairman rings in the Chinese megabank's debut on the Shanghai Stock Exchange. Alongside him is the city's Communist Party secretary, indicating the close relationship between China's banks and its political leaders. The government's been nursing the bank back to health from technical insolvency just 3 years ago. Not even the fact that Shanghai's bourse is down 25% this year was going to delay the government's plans to list it.
From Agbank's perspective, it believes that its prospects for the future are good and it has long-term potential, and it believes investors will recognise that.
But that confidence was found wanting today as the stock wallowed around its opening price. There's concern among investors that last year's government-ordered lending binge has left China's banks desperately needing to raise new capital. While the government's able to lean on its political friends to support the float, it's got a much tougher time convincing everyday Chinese investors, like those at this brokerage, of Agbank's future. After a year of heavy losses on the Shanghai Exchange, many are angry and they're suspicious about the timing of the world's biggest IPO on their exchange.
Now every bank is lacking money. They all need money. Agbank wants money too. Where does the money come from? The government doesn't have any to give to them, so they turn their hands to the stock market.
Many Western financial analysts agree with those concerns.
If you looked at it from purely a market point of view, this would actually be a very bad time to go to market to try to raise capital. The market is soft. A number of IPOs have been canceled this year. Other IPOs that took place are underwater. Last year, when the banks became a conduit for stimulus lending, they really went back to their old role in many ways of pursuing policy at the expense of profit. And so now, if they want to continue the reform effort, it means repairing some of the damage that was done and getting back on track. That won't be easy.
But it's not just the bank's loan sheet that's causing concern. China's recent undertaking to allow its currency to appreciate could have implications for bank profitability.
You have a business model that depends on regulated interest rates, and there's a regulated spread in the interest rates. And as China moves towards a more convertible currency, then that advantage, the built-in advantage that the banks have, isn't going to be around anymore.
With Agbank's record-breaking IPO of $22 billion, China's other big publicly listed banks may find the well dry when they too turn to the market later this year to raise more capital.